Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Yesterday, we talked about fundamental analysis. Today, we're going to talk about technical analysis. Technical analysis is essentially using a chart to tell you when to buy and when to sell a particular stock. That's really it. Now, there are some pros and cons to technical analysis, and I'll kind of go into those. I'll also give you an example of what this can look like at its simplest, most basic level. Okay, I'll show you why I'm like really gonna start at the bare bones minimum first, and then we'll kind of work our way up in future videos if that's what you would prefer. All right, so pros of technical analysis. Depending on your level of expertise and what you are trying to do, it can be very easy for beginners to kind of latch on to. You see green, the stock went up. You see red, the stock went down. Boom. Okay, it's your job to just look at it and decide when you want to hop into it and when you want to hop out of it. That in and of itself is easy. Now, the con of it is it avoids two things that are important. Number one, in most cases, not all, in most cases, it doesn't tell you what is going on with the company because all I'm looking at is a series of lines and graphs, and that's it. So, for example, I know that Snapchat is looking to let go of 20% of its staff. Well, that's going to mean something, right? We talked about AMC yesterday, I know that there aren't that many movies going into theaters. That's going to mean something. Now, whether that's going to help or hurt either of those companies, the chart is not going to tell me that. The chart is not going to tell me that at all. It doesn't include news. All it says is stock was up, stock was down. That's all it tells you. So it does take out a lot of context. The other thing, it is very visual. This is a good thing. You can easily see whether something is up and down. For some reason, you get some people that say, oh, well, I just invested in X, Y, and Z. I'm like, yeah, but you know it was down like 50%. Like, no. I'm like, well, if you looked at a chart, you would have known that. So that's another thing to pay attention to. The pros here, other than that, is obviously visual. For some, it can take the bias out of it. So when we did AMC yesterday, we all have biases that we carry into things. Maybe I'm biased and I think it's a meme stock, right? Maybe I'm biased. I only watch certain movies. Therefore, if it's not a superhero movie, if it's not Top Gun, I'm not going to go to the theater. Maybe there are other movies out there. I don't know, right? So those are other things where I can just look at the balance sheet and say, well, I don't like this thing, and I'm not comparing it to everything, or I'm not walking into it with a clear mind. Whereas technical analysis can clearly tell you this is what it is. It's more like math. The answer is right or it is not. The other problem is depending on how you're looking at it and what type of metrics you're having and what type of formations are you looking for. So pros and cons to both sides. If you were to ask me, again, I'm someone who is really in the middle, and we talk about this inside the members only all the time, that I am in the middle. I talk about the business, talk about what's going on. I talk about the economics behind all of these things. And then I'll also go to a chart every Thursday to decide what I'm going to buy on Friday. So for me, I am in the middle. But let's go ahead and show you what this looks like on a, again, super basic level. It's like kindergarten level, and then there are more advanced levels well beyond this. All right, so this is Eli Lilly. The company is obviously up since, what is this, March? Let me get rid of this ad here. And this is TradingView. Always does that to me. Okay, so this is TradingView. You can do this on Yahoo Finance. You can do this on Thinkorswim. That's not the only place to do it. It's just one of the places that I do like. But for March, you can see all the way to the right that the stock was at one point around $250. And today it is at 301. That's a pretty decent gain, especially in a year like this. And you can also see these are candles. We call these candlestick charts. Green, stock was up. The bigger the candle, the bigger move, or the larger the move was. So on this day, it was a great day for Eli Lilly. This is a great day. These are a series of great days right here. And then you can see some bad days, right? So red is bad, red is down in this case. And you can see here as well. So one way, the easiest way to do this, and again, just because it's easy doesn't make it the most effective. I want to be very clear here. You can do what's called a trend line, and you can find what we call support. What that means is, in a formation, and what technical analysis believes, is that if a stock falls to a certain price level, if you can find a pattern, you will notice that it can fall to a certain price level and bounce up. And when it falls to that level, that means that you should buy it at that point, and then you should start to see a gain. Does that work 100% of the time? No, it does not. However, If you do it and you set your parameters correctly, most technicians and most day traders believe that it works. Now, you can also look at statistics and see that most day traders lose money. So there's that, right? So just giving you both sides of the argument here. All right, so let's go ahead and look here and let's draw a trend line. Now, in most cases, again, everybody has their own way of doing this. And again, it's like technical analysis is a lot like music, a lot like style, where you can listen to something and be like, oh my God, this person can sing. It's the greatest thing I've ever heard. And then somebody can listen to the exact same song and say it was terrible. It's really like that. So again, that's why I'm just trying to give you an even keel here. But in either case, what we do is draw a line, and we'll draw it here. And you want to have points of confirmation. You don't want to just draw any line. You want to say like, every time this happened, or at least most of the time this happened, the stock went up. So here's how that works. So in most cases, they'll tell you, I say they, but you're looking for a line of confirmation, a line of support that has at least 3 points to it. So if we draw this line here, you'll notice that we had 1, stock came down, bounced up, 2, barely touched here, but it did come up, and then 3, right here. So this tells us that at 301, right at about 301, the stock comes down 301. It's 301.74 right now. It comes down 301, you buy it, and then it should come right back up somewhere in this area. Now, that is not a guarantee at all. The entire stock market, now and this is fundamental analysis. I know that the entire stock market has been down 4 days in a row. Eli Lilly, according to this particular chart, says that next day or two it should start to bounce off of that line. Now, there's positive and negative to this. Positive, you can see, we can all sit here and see this line. The other problem is, you could look at this and draw this line completely differently. So let's take a look at that. So if I'm also looking at this, I could also come back here. Actually, let's just do this. Let's get rid of this line altogether. I could start this line back here. And I could say that, let me go to trend line. I could start all the way back here. And I could say that it's kind of already come through, right? And that we need to wait until something else establishes because it's already kind of broke this line. Now, I broke the line here too, but maybe it's already gone past and this is not a good enough level for me to buy. I should have bought it, or it should have bounced at 303.96. That's a fair comparison, but it all depends on how you interpret it, how your lines are drawn, and how many times you have tested it to see if this particular tactic works. Now, this is, again, not the only way. You have others that use what we call a simple moving average, and instead of doing day by day, this kind of shows you more of a wavy line, and that line will hit the trend line that we drew and will tell you or give you a better indication on when to buy and when to sell. Some people don't use any of these lines. Again, like style and music, you have to find what works for you. But this is basically what technical analysis is. Now, it can get way more complex with a lot more drawings, a lot more shapes, but I'm just here to give you an intro, a 101 on what technical analysis is and how it works. Now, should you use this, and how effective is it? The effectiveness varies. There's an entire book called A Random Walk on Wall Street that says that all this is BS. Okay. And when I started to learn about technical analysis, I've taken classes on it, read books on it. I used to think that it was BS as well. That is not 100% true, that it is all just junk science and, what do you call it? Not astrophysics. Astrophysics is a real thing. What is the zodiac sign stuff? So it is not that, but it's also not everything. I think being in the middle is the best place to be. That's just my personal opinion. But there are some things that you can learn from a chart that can give you some information. So for example, I do want to look at this, right? So let me go back and get rid of this line. Okay, so notice here that this is actually earnings season, or not earnings season. This is when they announce earnings, and I can see that for whatever reason it did start to drop, and things start to improve. I can see here that they announced earnings on this date, but right before that, the same pattern seems to happen. And that's not a confirmation that it happens every time. We could go back in time and see how many times it happens, but it does seem, at least in the last 2 times they've announced earnings, for whatever reason, a few days before, there was a constant slide before earnings, and then it starts to come up again. It's a constant slide before earnings, and the stock comes back up again. So if I'm somebody who's maybe a swing trader and somebody who wants to take advantage of a short-term trade, that might make sense. Now, I'm not coming out here and just confirming that for you, but I am saying that there is some validity to it, where not every single time a stock moves that it is 100% random. Sometimes there's a clear pattern that has emerged. Right now, if you look here, it looks like, you know, I'm wondering, like, is earnings coming back around? Now the answer is no, because it just happened in early August. But it feels like it, right? But again, just because it feels like it, just because it looks like it, doesn't really mean that much, because the entire stock market is down. So that's why I believe you should be somewhere in the middle. You want to understand what this company does. You understand how this industry does as well, and then you can use a chart to tell you when you should decide to get in or out of that particular stock. So that is my super high level overview of what technical analysis is. If you want more, feel free to let me know. If you want to learn how I personally use this on my weekly buys when I decide to buy on public, you can check out the members only. I said this before, but this is exactly the same app that we use. I'll show you how I look at it. I look at it a bit differently than how I showed you here. It's also quite easy if you ask me. You can ask the members too there in the comments. But I can show you how to do that inside the members only. It's just $10 a month. Fresh new videos every single week, and most of them are by request. All right, that's it for me. I will see y'all tomorrow.